I will briefly talk about how to create a securitization market in a developing country, because what I believe is securitization could promote the inclusive growth in developing countries by making capital flow much efficient. So when we say securitization, which is a quite niche topic, securitization is a financial practice of transforming illiquid assets into liquid interest-bearing securities. So by doing securitization, financial institutions or corporates could do capital optimization and liquidity access while transferring the risk to the investors. So on the one side you do risk transfer, but on the investor side you create assets to be invested. And lastly, this is what I believe, that's why I created TeamSec Securitization as a service. Securitization enables greater efficiency in the allocation of capital and liquidity in the markets. So when we look at the securitization and the key stakeholders there, you see the flow of securitization that I'm gonna touch upon, but we have 4 or 5 different important players in the securitization system. The very first one is the originators. Originators are the ones that create the receivables, either the accounts receivables or the credits. Mostly these are the banks, financial institutions, mortgage houses, and also the corporates that needs working capital. For a securitization process, one of the most key part and stakeholders is SPV. SPV stands for a special purpose vehicle, and it is a separate legal entity established just to transfer and put all the receivables onto the balance sheet so that it can issue a securitization or securitized product. And thirdly, obviously, we need investors to be part of the complete securitization deal. So when we say the investors, mostly mutual funds, pension funds, banks, and high net individuals. And to manage all the platform, all the transaction flawlessly, we need a securitization platform or technology provider. Here, this is a very new phenomenon in the world. Usually all the big banks, like very big investment established banks, carry out the transaction deals, but lately fintech companies like TeamSec has emerged to make a securitization market flawlessly. So here you can see the transaction flow, how the originators generate the receivables, then it's transferred to the asset finance fund or the SPV, then the investors are purchasing it so that cash is transferred to the originator. As you can imagine, the flow is not as synchronized or liquid or transparent as Dubai fountain. So usually, although it's not synced to the music, the people in the finance industry have the tendency to keep up the dancing until the music stops. So that's why I created TeamSec. Although our services have not been synced to the music yet, the idea is to create the flow in a very transparent and liquid form so that everyone could understand what's going on with the underlying assets during the process. This is the idea of creating a securitization fintech company, to be honest. So in Turkey, I could ask a small question. So we initially started in Turkey, and Turkey is a $1 trillion economy, and we have almost the same size of financial assets. Could you imagine the percentage of securitization financial products or securitized financial products in Turkey out of $1 trillion worth of financial assets? Any guess? Joel, do you have a guess? Yeah, it's right now, thanks to TeamSec, it's only 3 basis points for a $1 trillion worth of economy. Before TeamSec, it was 0, literally 0. So what we have done, what I have experienced so far to create a securitization market, in my personal opinion, I just thought the 3 criteria would have been so helpful during the process. And obviously, the most important thing is the regulatory framework. So my aim is to take securitization to not the developed markets, which is already existing securitization market, but to go to the developing or underdeveloped market. So the very first thing I do is to check the regulatory framework. And for instance, in UAE, Dubai has passed a securitization regulation last year, in the beginning of last year. So when we look at the regulation, instead of going to all the investment banks or really expensive lawyers, I just list the 5 most important legal framework that a person or a company should look at. So the very first thing, since the idea of securitization is selling receivables to the investors in the form of interest-bearing securities, the very first thing we should look at it is the civil or code of obligation regulations in the country. If there is a need for a consent of a debtor, if the debt is sold to the investor, then you cannot have securitization. The very first thing in a country, for instance Qatar, you cannot do it, because in Qatar regulations, code of obligation requires the consent of the debtor if the debt can be sold. So the very first thing is the civil code or code of obligation. So that could be sold without the consent of the debtor. When you have that, the second thing should be, as you saw in my previous slide, we have to set up a securitization SPV that shouldn't be consolidated by the founder. Let's say if ENBD sets up a securitization SPV, then ENBD shouldn't consolidate it. Otherwise, there is no point of creating a off-balance sheet transaction. So, and also the SPV should be legally default-free format. So when you put an asset on the SPV's balance sheet, no one could go there if there is a breach of, let's say, delinquency or default, and etc. etc. So the second important point with respect to regulation is the capital markets law allowing to set up a securitization. UAE has just passed it last year. So the third one is obviously GDPR, general data. So for a country to do securitization, the law, specific laws should allow the or entities to access the personal data of people without any consent, so that they could manage and work on the data to create financial products, the interest-bearing securities. So this is a very important part of a country to have a healthy securitization market. And the fourth point I would like to raise is the banking law regarding banking law. As you know, all the data generated when a client becomes a customer of a bank is a confidential data. Banks have very limited frameworks to use the data of clients. Let's say if you become a creditor of a bank or a client of a bank, if they extend you a credit, the credit ID becomes a GDP related data plus banking regulatory confidential data. So it blocks you everywhere. Unless you have a specific law in the banking or a phrase in the banking law allowing you to work on the data with only the purpose of securitization. And the fifth one was the central bank law. So if something needs to be liquidified or if something needs to have any money, the best way, as far as my experience goes, the best way to make something valuable is to make it as a collateral to the central bank. As long as banks use it for liquidity, then the product makes money. Just imagine treasury bonds. Just imagine any government bonds. If central banks do not accept them as collaterals, they have nothing, just paper. So then what a country or what we did in Turkey was to accept particular AAA rated securitized product as collateral to the central bank so that it had liquidity. After you complete the regulatory framework, then you are pretty safe. Then what you need is an STC criteria matching regulatory compliance securitization platform. The flow that I showed in the previous page should be so right now digitalized and flawlessly, so that everyone knows what's going on in the transaction well, so that we don't have 2008 and 9 crisis again, obviously. And the last one is educating the market participant and promoting investor confidence, because this, when you create a new market, securitization market, investors have no idea about what's going on, so you must definitely educate them. So these are some photos from 2008 and 9 crisis. As you can see, Lehman Brothers guys, people leaving Lehman office in London, and people are protesting in front of Lehman Brothers and asking who's gonna be the next and etc. So when I decided to set up the securitization business, I did study the crisis thoroughly, to be honest, and I found out two things that I believe caused the crisis and what TeamSec solves, to be honest. And this is how we, I believe, become successful in what we do. The very first thing is the deception of investors. So when you manage and pool a mortgage portfolio of people from Miami and sell it to people from, let's say, some syndicates in or some associations in Australia, they have no idea about what's going on with the mortgage market in Miami. So the problem is all the securitized products are getting very high rating. Just the raters or rating agencies do not look at or they don't have the capability to study the market of the underlying assets. So deception of the investors or the conflict of interest is always there with securitization, always there. So to solve it, you have to create transparency. To solve any conflict of interest, you have to solve the transparency. And this is the very first thing that we have done in Turkey with TeamSec to create transparency. And also again, the transactions are in a closed box and closed circle transactions, meaning that the originators who extended the credits really well, how those underlying assets behave in different economic conditions. If the interest rates are going down, if the CEO of the bank and the CFO of the bank thinks that interest rates are going to go down, then everyone knows that there are going to be huge prepayments. But when you sit on the other side of the table, let's say you are a fund manager in an insurance company, you have no idea. You have very limited access to, let's say, credit bureaus and etc. So that you have very limited ability to monitor and assess how the credit portfolio are gonna behave. So what we have created, I'm just passing this one immediately. So what we have created at TeamSec and as to create a securitization platform, we created a real-time working. This is one of the very first one in the world, a real-time reporting system and dashboards where both the originators and the investors and the SPV founders use and monitor all the transactions with real-time, day by day, from the same dashboard. Everyone has the same dashboard. So through the dashboard, everyone can choose through which SPV, through which ISINs they have purchased, and when they choose the ISIN numbered securities, then the future cash flow of daily future cash flow of what they have purchased comes up. So the gray ones are the ones that TeamSec has modeled to be paid in the due course of the transaction, and the red ones are the real-time realizations. So this is directly fed from the core banking or ERP system of the originators. So since all the receivables are transferred to SPV by either invoice ID or by either credit ID, when we create a technology there, software there in the core banking system or core ERP system, whenever a payment is made with respect to the flagged and ring-fenced receivables, immediately we receive a notification. By the end of every day, we made a cash-based reconciliation. So that, for instance, here everyone knows that if the market is still volatile, I know in the end of the transaction we are expecting to collect $600 million, but still in halfway we are better than what TeamSec has modeled, and it's going well. So it eliminates the conflict of interest, it eliminates the closed box problems that caused 2008 and 2009 crisis. And then also in our system you can see the geographical distribution of all the loans. Bigger the bubble is, the bigger the risk is in that area. This is prepared to show if there is a natural disaster, if there is something going on in particular places, then how much risk you can have can be shown again with real time on the dashboard for both the originators and for both the investors. And then you have many other features in the system. As you can see, the collections distribution with real time again. You can see how much of the transactions came on due date, before due date, or the past due date. And also you can see the collections from delinquencies and their rates. So for instance, that we have after due date payments is stand around like 18%. When you look at the 18% distribution, as you can see, 94% has been paid within 1 to 10 days. So the system learns from its experience, and we have mix it with a machine learning, so that the next transactions we do can be learned from the past experience, which I will touch upon. And also, when you purchase a product, we do all the financial engineering, and we say, let's say at the end of the at the maturity date, the delinquent rate would be around 0.5%, but with real time, as you can see, the delinquency rate is 0.3%. So everyone feels safe in the system, and when they can look at the delinquent amounts, again the day brackets, day bands, and etc., and also the geographic distribution. So all in all, with all the transactions that are being transparent, so that the transparency and simplicity of all the transactions could be set up, then what we added even more is to merge securitization with AI. Basically, as I told you, for instance, currently in Turkey, we are serving more than 400,000 credits with only 10 people. And because of the different sectors credits that we have receiving, different individuals credits that we are receiving, and from the dashboards that you have shown that, let's say, delinquent amounts 94% have been paid within the 1 to 10 days, we have started to develop the financial products in the same manner. Let's say if we are issuing a product with the latest maturity day of 365 days, and if we saw the from 1 to 10 days delinquencies repayment is 95%, we put credits with the last maturity day of only 350 days. So we give 15 days buffer there. So then we have decided to turn it into machine learning, so that originators and the banks do not need us, because we have to give financial engineers and data analysts and credit analysts to them to work on it, or they have to go to Moody's Analytics, S&P Analytics and pay tons of money, and it takes too much time for them to assess it. So we create a machine learning system. So through the machine learning, the banks and the originators and everyone can put what they expect in the future to be happening. We expect the volatility in the interest rates. We expect the interest rates go down. We expect the interest rates firstly go down and go up. So what machine learning does is, it takes the interest rates of the country, of the economy, the underlying assets are created. For instance, this is a real case from Turkey. You can see the interest rates fluctuations in Turkey from 2016 to today. There are 3 lines. One of them shows the retail credit, auto loans, and commercial loans. It is taken from the Central Bank of Turkey. This is a data that shows the market rates in the economy. So what happens is, what the machine learning does is, when the CFO or the CEO of the bank or the financer thinks the interest rates are gonna fluctuate in a particular way, it immediately brings you the monthly and the cumulative delinquency rates, prepayment rates, payments from delinquencies, and etc., because it's all changes the future cash flow of the assets that you have purchased, so that you will have a more educated guess, you will have a more educated understanding of the underlying assets. And if you think, let's say, the interest rates, because I personally think interest rates might go up, another investor might think the interest rates go down, and when you simulate it within the particular assets that you are purchasing, then you will have a better understanding. If it doesn't match with what you have, what you are purchasing here daily, then you don't purchase it. Even if you purchase it and something happened on the contrary of your assumptions, with real time you know how deep you are in the process or how well you are in the process, because the problem will begin when the red line is gonna go down the gray line. So what happened in 2008 and 9 crisis, everyone realized the red line went below the gray line on the maturity date. So then you have a collective distribution of the system. So through the securitization platform that we have created, you can manage and see it with real time directly from the core banking system or core ERP system of the originators, so that no one could deceive the investors. So this is the end of my presentation. If you have any questions, I'm more than happy to answer. But if not, I really thank sincerely every one of you to come here and listen to me.